cost of goods versus an expense. The difference between those two categories are a cost of good is a direct expense in the production of your product or in the production of the service that you sell. So in other words, they are the expenses that relate directly to the money you're going to bring into your company. So that would be specific direct labor. It would be materials if you're producing something. It's your inventory. Those are your cost of goods. If you have to rent specific equipment for each type of job you do, that is a direct cost of goods. Expenses are what you put money out on to run your business. So those would be general payroll expenses, your office rent, your utilities, your operating software that's specific for that, advertising. The biggest difference between those two categories is that as your revenue increases in general, your cost of good increases because you need to supply more labor to sell more labor. You need to supply more materials to create more product. So those two categories are often correlated. The expenses of running your office exist whether you're making X amount of money or you're making Y amount of money. You still have to pay your rent, your utilities, your telephone bill. So those are expenses you have to know that are going to take place over time. So when you're looking at your gross profit, that's your revenue minus your cost of goods. So the amount I sold and the things that specifically had to happen for me to sell that amount. Then you subtract the rest of your expenses, and that gives you your net profit. So those are two separate layers of information. So the other question that we get are fixed versus variable expenses. So fixed expenses are the ones you can count on every month. You know you're going to get your telephone bill, you know you're going to get your rent, you have insurance that's not dependent on labor. You have the staff that run your direct office that don't have, those people are going to be there. Your payroll person is going to be there, whether you're selling X or you're selling Y. Variable expenses are the ones that are going to increase or decrease based on your sales. So in other words, you're going to have to buy more materials if you're going to increase your production of your product. You're going to have more labor hours if you're selling services, and you're going to increase your service revenue. So that would be the difference between a variable or a fixed expense.